senior correspondent, markets correspondent Kevin Green is with me. And I was noting that this has been an incredible month for stocks, the S&P and the Dow having their best month since 2023. So there is some positive that has gone on in May, but of course everybody's in a wait and see mode. Kevin?
I would agree with you. The adage, sell in May, go away, that actually hasn't been in effect for a fairly long time. Actually, over the last decade or so, we've actually seen some pretty strong Mays. And obviously, this one is seeing some follow through as well, given the environment that we have been in and the positive news that we've seen around the tariff policy just in general here, Nicole. So we are seeing a little bit more risk on in the market. And you can see that with the positive performance from the S&P 500 yesterday. We saw over 90% of the stocks in the S&P actually advancing yesterday, which is somewhat of a rarity, to say the least here, and you would like to see a little bit of follow through, trying to get a little bit further away to the upside from that 200-day moving average. But from a technical standpoint, we've been able to hold up key trend lines from the lows that we saw because of the Liberation Day. And now we have been able to hold that 200-day moving average, which we did briefly test on Friday of last week. And we obviously did see some follow through. For today's session, though, what I'm actually kind of focusing on is the 59.20 level. We're above it right now, but what we would like to see is potentially coming back, retest, and seeing some buyers really trying to step in here. And then your next area of technical resistance is going to sit around 59.50, but you are seeing some positive flows to the 59.60 level to the upside there. So that could be your primary area of resistance for today. Any further breakdown to the downside, trying to retest that 59.05 level. There's a structural position that's there. We've been mentioning that for the last couple of weeks here. And if we do break below that 58.75, but the trend is definitely positive for now. You are seeing the right sectors really leading the way when it comes to market cap weighted impact on the S&P 500 from consumer discretionary, communication services, and technology. And obviously, we will be focusing on Nvidia earnings after the close. Maybe not so much for Nvidia's performance because it has been lackluster over the last couple of earnings cycles here. Actually, in fact, we have seen some pretty aggressive pullbacks after their earnings. But let's see what happens to other semiconductor players in this space and if they are able to catch maybe some favorability because of the commentary from Nvidia. For instance, Micron yesterday saw a significant amount of bullish call activity taking place. We did see some interesting call activity or put activity, I'm sorry, on the SMH as well. So everybody's getting positioned. All eyes are going to be on Nvidia, but we do have some intraday things that are going to be happening as well. The last thing I will want to highlight here, 5-year Treasury auction is going to be for today as well. We did see the 2-year Treasury yesterday. That auction went off really, really well. And so you would like to see some follow-up there for the 5-year, hopefully stabilizing Treasuries across the curve here, which would be conducive for equities to continue to move higher.
All right. I'm glad you're highlighting each of those because so important. And then when you zoom out a little bit, is there a big picture theme that you're looking at?
I think big picture wise, not so much here in the United States, but what's happening over in Japan. We have seen obviously some concerns when it comes to the longer dated Japanese sovereign debt that's been issued there. We have seen some volatility in that space, but the Nikkei actually did see a nice little pump yesterday, but we are seeing a pretty decent pullback here for today. And I'm keeping my eye out on the US dollar Japanese yen pair compared to the S&P 500. It's actually a pretty decent indicator or a leading indicator potentially for the S&P 500 just in general. And the Japanese yen pretty much hit a pretty key area of support at around that 140 level if you're looking at the pair alone here. And you are seeing a little bit of a bounce to the upside, meaning the yen is getting weaker, dollar is getting stronger. And we have seen in the past that when we have that type of environment, it has been positive for equities here in the United States. So if that technical support area is going to be able to hold for the yen, and we do see a retracement back to the upside, I think that's going to be another tailwind for U.S. equities here over the next couple of weeks. But be mindful and keep your eye out on that space. I think if you're looking for perceived risk or potential risk in the market, it's probably coming from Japan. That could be a little bit more systemic than what we are seeing or the concerns that people have had regarding U.S. Treasury debt.
Right, understood. Yeah, and such a big story. Japan has a lot going on. I mean, you talk about the strengthening of the yen, obviously in focus there. And then what stands out for the chart for the equal weight S&P?
Yeah, if you had to pick a chart that gave you, some bullish confidence here, Nicole, for me, it's going to be the equal weight S&P 500 because it has been very textbook from the drawdown to the recovery over the last, month and a half here. We've had this perfect two-wave pattern to the downside. Those that follow Elliott wave theory or Dow theory kind of really subscribe to the fact that we usually see markets draw down in waves as well as push higher in waves here. So we did have that three-wave pullback. We are seeing now that retracing back to the the upside. The primary blue line there was kind of that downtrend line that has been acting as an area of resistance. We broke above that and then came back and retested that. Basically on Friday, we came back, retested that trend line, and saw a really strong candle yesterday. You'd like to see some follow through for the S&P equal weight coming back to around 7,300 and breaking through that. And I think if you can see the equal weight S&P perform really well technically, I think that's going to obviously translate to the market cap weighted S&P 500, because it's not only showing that there's broad participation, which gives you that foundation for a structural floor in the markets, at least a strong floor in the markets, but it also gives you a little bit more of a risk on tone that asset dollars are being spread around, not only just to the mega cap names that have a fortress balance sheet, but other speculative names in the market that kind of get overlooked, especially when we have these aggressive drawdowns like we saw early on in March and into April.
Yeah, and we're also waiting on economic news and retail news and such. Kevin Green, a final quick thought here. As you know, the S&P has held that 5,900 mark. That's sort of a good feeling for folks.
Yeah, it has been. Yeah, you don't want to get too far below that 5,900 level, at least for now. And I think if you actually see us gyrating around that or leveraging it as an area of support through the June monthly expiration, I think that's actually going to be, for the most part, bullish for the S&P 500. I think there's still some risk out there when it comes to economic data, as well as the trajectory of the tariff wars. But for now, the market's really pricing in, Nicole, that we're going to see a broad-based 10% tariff, maybe 12% weighted average for these tariffs. Anything that differs from that to the upside, I think, is a little bit of a concern. But for now, it seems like the market's kind of trying to price that already in here in this market. So yes, I would say the 5,900 holding, the 200-day holding, the 20-day moving average holding, the upward trend line holding. Everything looks pretty decent from a structural standpoint. If we do have a breakdown of any of those key levels, though, that's where you got to watch out below.
All right, Kevin Green, great to see you. Thank you so much.